Live from London, this is Bloomberg Daybreak Europe. I'm Vonnie Quinn with your top stories. Iran steps up its attacks on Gulf energy infrastructure as President Trump doubles down on his calls for allies to help secure the Strait of Hormuz. The US president delays a long-awaited summit with the Chinese president, saying he needs to focus on the war in Iran. Plus, tech stocks drive gains in Asia after Nvidia says it will sell $1 trillion worth of chips by the end of next year. So let's take a look at these markets. We have oil higher. It is on the move as these continued attacks on energy infrastructure come through. We have oil about 4.5% now. Brent crude trading just below $105 a barrel. New York crude creeping ever towards that $100 a barrel once again. The two-year yield up a basis point. We've got our first rate hike since the war started. It's from the RBA. It was anticipated. It is the second straight hike, though, and it was not by any means a consensus decision. Michelle Bullock, though, saying that it is to deal with the secondary inflation effects of this war. Let's take a look at futures because obviously we're having a good session in Asia. It does look like we will be starting negatively, though, at least in Europe and the United States. The US dollar index continues to outperform. A word from Giardini once again saying that he had thought there might be a big drawdown for the S&P 500, but this 5% that we've seen, it could be that that's it. All right, your risk events for today then. We're expecting a decline for the German ZEW survey. That comes out at 10 a.m. UK time. 12:15 UK time, US ADP employment. And also today, Zelensky is meeting Keir Starmer. President Donald Trump has reiterated his appeals for other nations to help secure the Strait of Hormuz, voicing his frustration with those that have been publicly non-committal. This as the war continues to roil energy markets after Iran stepped up its attacks around the Persian Gulf, further hampering the outlook for global fuel supplies. Let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jumana Brzezinski. So, Jumana, oil rising again today after the latest strikes by Iran on energy infrastructure. Where does it go next?
Yeah, that's exactly it, Vonnie. So day 18 of the war, once again, we're seeing a wave of strikes and attempted strikes from Iran to Gulf states. Saudi Arabia intercepting several drones overnight. But over here in the UAE, also temporarily seeing the closure of the airspace for a couple of hours in the middle of the night. And then renewed attacks on key energy points. The latest target being the Shah gas field. This is a natural gas field in the UAE. It accounts for about 20% of the UAE's gas supply and around 5% of the total world supply of sulfur. A fire was put out there, has been contained, but still just another manifestation of how Iran continues to go after strategic energy points within the UAE. We also heard of another fire around Fujairah that has been put out now. It seems as though operations have once again resumed. And of course, don't forget that last week, they also targeted the Ruwais refinery, which is the biggest refinery in the Middle East region. So it's very clear here that Iran has expanded the scope of what they're striking to just beyond U.S. assets or U.S. Diplomatic bases in the region to energy infrastructure. And what we're seeing on the back of that, and this is per our latest reporting, that many of the Middle East producers have had to start reducing output from anything from around 1.5 million barrels a day all the way up to 3 million barrels per day for the likes of Iraq. So you're in a situation now where so long as the Strait of Hormuz remains effectively shut, alongside these ongoing attempted attacks at key energy infrastructure sites, you're going to continue to see that upward pressure build up on oil, despite President Trump's best efforts to put together a coalition of nations to try to reopen the strait by force, and this record announcement by the IEA that they're going to be releasing these extra barrels to the market. But the market is really focused on the ongoing disruption and, of course, these attacks on key sites in the region.
Meanwhile, Israel's military is expanding its operations and ground incursion into the south of Lebanon. Jumana, what more do we know about its intentions?
Yes, so this is a parallel front, obviously, that has been, will be very much front and center for Israel since the third day of the war and since Hezbollah fired those series of rockets into northern Israel. The retaliation from the IDF came quite swiftly. They ordered hundreds of thousands of residents in the southern part of Lebanon to evacuate their territory and then begun a series of airstrikes around key areas, not just in the south, but also in southern Beirut, even some parts of central Beirut and the Bekaa as well. And they have said overnight that the ground operations are going to be expanding too. According to Bloomberg reporting, this might include up to 2 divisions, i.e. around 20,000 soldiers being deployed into the southern part of the country. This would take them to around 12 points of occupation. Or what they say is a buffer zone, so that they could preclude the possibility of Hezbollah regaining a foothold in the southern part of the country and once again firing rockets back into northern Israel. Now, you have to go back to the ceasefire that was agreed between Lebanon and Israel in November 2024, when the Lebanese government committed to a full disarmament of Hezbollah. You fast forward to today, and even though they had some success south of the so-called Litani River in the southern part of the country, a full disarmament was not achieved. And it is because of that precisely that IDF are saying that they have relaunched these series of attacks in Lebanon. The front is very much active from Israel's point of view. Meanwhile, the Lebanese government are actively trying to work the diplomatic channels to stop this from escalating into something further. About 800 people have been killed, 1 million displaced.
All right, Jumana, thank you so much. Bloomberg's Jumana Bercecci. President Donald Trump has requested a delay to his summit with Chinese leader Xi Jinping for about a month, saying it was important for him to remain in Washington to oversee the Iran war. Now, China had previously proposed a later date to allow more time for preparations. The U.S. president said discussions about a new schedule were ongoing.
I don't know. We're working on that right now. We're speaking to China. I'd love to. But because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month.
Bloomberg's chief North Asia correspondent Stephen Engel is in Hong Kong for us. So, Stephen, it's pretty significant. Just how significant is it for both sides if the meeting is delayed?
Yeah, I think there will be a battle of narratives a little bit because that's already begun. Because more than a day ago, you did hear Donald Trump actually say he was considering calling a postponement to that summit if China would not come on board and help with the safe passage in the Strait of Hormuz and, protect their interests as well at the behest of the United States and their efforts there. Obviously, China has not responded to that. A day later, we're seeing Scott Bessent, the Treasury Secretary, talk about that's a false narrative. But we heard Donald Trump say those words. Bessent is essentially saying it's a logistics issue, and also, as Donald Trump just said, he needs to put his entire attention on the war in Iran. Nevertheless, we haven't heard yet from the Chinese side whether they will, confirm that the summit that was due to start March 31st is postponed. And the reason I think for that is China actually, and I was in Beijing the last 2 weeks, has never really confirmed to the public that this meeting was going on and going forward. So I think at today's Ministry of Foreign Affairs regularly scheduled press conference this afternoon in Beijing, the press secretary will most likely be asked this, and perhaps he'll have also some sort of face-saving words. But again, it's up in the air right now. But my bets are that this meeting is going to be postponed indefinitely. Donald Trump says it could be a month. But again, that's an optimistic outlook, given some of the projections on what's still happening in the Middle East.
All right, we'll wait for an official response out of China. Stephen, thank you so much. That is Bloomberg's Stephen Engel. The chief executive of the world's most valuable company has forecast that sales will reach $1 trillion by 2027. The Nvidia CEO Jensen Huang was speaking at the company's GTC conference in California, where he also unveiled a lineup of new products. Bloomberg's Ed Ludlow has more on that lofty sales prediction.
It's $1 trillion of sales, but between 2025 and 2027. And unlike the forecast we got in October from the DC edition of GTC, it lacks some qualifiers and details. So back in October, when they gave us this $500 billion figure, it was only for Blackwell and Rubin systems. It was for 5 fiscal quarters through the end of calendar year 26. And then we found out later that it also included networking sales. We don't have that level of detail, granularity about the 1 trillion other than it is 2025 to 2027. But what it does do is push Nvidia's visibility for its systems further into the decade through 2027. It's a cumulative figure. Elsewhere, we got updates on Grok with a Q on the inference side and how its technology is being integrated into future systems starting in the second half of this year. We are going to get specific designs for space-based data center, an area that Nvidia is now admittedly pushing into. And they want to push deeper into CPU, right? That's been Intel's stronghold, but they see value in going to that and said that it was addressable market worth multiple billions of dollars to them. Beyond that, this was classic GTC. It was the AI Super Bowl that it always is. And Jensen Huang, in a 2.5-hour presentation, talked about how Nvidia is a necessity at every single layer of the 5-layer AI cake that he often talks about. This is Ed Ludlow for Bloomberg News in San Francisco.
Tech stocks, meanwhile, are leading shares in Asia higher, although the Kosdaq is now flat. Let's get more from Winnie Su in Hong Kong. Winnie, what's been happening today?
Yeah, morning, Bonnie. As you just mentioned, we are seeing tech stock really being that bright spot in Asia today. Yes, it is that upbeat forecast from Nvidia lifting overall sentiment, but specifically Asian stocks, Asian tech names also have some additional tailwinds. You're looking at on the top of the board, Samsung Electronics leading gains up nearly 2%, and that's coming as Samsung unveiling that. It's coming as Samsung unveiled that HBM4 chips at the event, and also Nvidia talking about how Samsung is manufacturing chips for its Grok startup. And when it comes to the auto sector, we are looking at Nissan and Hyundai Motor both gaining, and that's coming as Nvidia also mentioning they are expanding their business development in the auto motor sector, and hence you are seeing stocks reacting on that front. Now flip the board and take a look at how that's impacting the broader Asia market. We are seeing MXAP here trending higher, supported by Kospi. But when it comes to the weaker side of tech, HS Tech actually flipping into the red. And yes, that is the overall weak sentiment from the potential delay of the Trump-Xi meeting. But also we've just got that scoop saying that China is now clamping down on these Hong Kong IPOs from the so-called red chip companies which are registered outside of China. So that's also hurting sentiment a little bit here. We did get the RBA rate decision. Yes, it is a hike as expected, but overall it is kind of a tight decision and hence seen as slightly less hawkish, and hence you are seeing the 3-year yield falling 4 basis points. Now flip the board and take a look at the Japanese market, because in that sector we are looking at, interestingly, shippers leading gains up 4.5% on the expectation that container rates are going to remain elevated given the disruption in the Strait of Hormuz. And when it comes to the 20-year yield, we just had the 20-year JGB bond auction passing smoothly, and hence seeing yields dropping slightly, with the yen still weak at 159 versus the dollar. And we are expecting a hold for now for the Bank of Japan decision coming up later this week. Back to you, Vonnie.
So much happening this week. Winnie, thank you so much. That's Winnie Su in Hong Kong. And coming up, European Union ministers reject President Trump's request for help escorting tankers through the Strait of Hormuz. We'll get the details from Brussels later. But first, Australia's central bank raising rates once again. We'll take a look at how the war in Iran influenced the RBA next. This is Bloomberg.
We are working with others to come up with a credible plan for the Straits of Hormuz to ensure that we can reopen shipping and passage through the strait. Let me be clear, that won't be, and it's never been envisaged to be, a NATO mission. That'll have to be an alliance of partners, which is why we're working with partners both in Europe, in the Gulf, and with the US.
UK Prime Minister Keir Starmer there. Finland's president says NATO allies should take Donald Trump at his word when he ties the future of the alliance with actions taken to secure the Strait of Hormuz. Speaking to Bloomberg, Alexander Stubb also called for mediation to end the war.
I think we now need to de-escalate rather than escalate. So what we probably need is peace mediation. The actual original operation was not discussed with allies, but I'm sure that President Trump is now in conversation with the UK, with France, Germany, the big players.
I think President Trump said that NATO faces a very bad future if US allies fail to assist. How should we take that?
Well, I think, we obviously have to take everything that the President of the United States says seriously. I think the key now is to focus on the alliance and what we do. We are a defensive alliance, which means that we don't do military attacks as such. We're 32 countries. Of course, after the Cold War, we had some peacekeeping missions, but they were always justified through international law and UN charters. So this is quite different from that.
Do you think the US should be helped?
I think those countries that have the capacity and the will to help the United States will do that and should do that. We have to understand that the situation, of course, in the Middle East and in the Gulf region right now is extremely serious. We have Iran that has attacked somewhere between 10 to 13 different countries with missiles and drones, and that's why I think any de-escalatory measure right now would be very useful. Iran's interest, though, the problem here is that Iran seems to have three interests. One is to cause damage to its neighbors. Two is to maximize the harm on the global economy through the oil price. And the third one is to keep up their current regime.
But how does this de-escalate? First of all, who are the right people or the right person to try and help?
Well, we need a ceasefire. So I'm just wondering whether the Europeans or actually India could get involved. We saw Foreign Minister Jaishankar calling for a ceasefire and negotiations just to calm down the temperature and freeze the situation as it is. The problem in these kinds of situations is when you kind of have three players, Israel, the US and Iran, all with more or less different interests. It's very difficult for them to organize themselves into a peace kind of a situation.
The Finnish President Alexander Stubb speaking there with Francine Lacqua. Now to some other top stories we're following this morning. The United Arab Emirates has reopened its airspace after the Gulf nation fully shut down air traffic as it intercepted drones and missiles. The brief shutdown came a day after Dubai's main international airport halted flights for several hours after a drone strike triggered a fuel tank fire. Air traffic operations have returned to normal. The New York Times is reporting that the United States has told Cuba that for meaningful progress to be made in negotiations, President Miguel Diaz-Canel must step down. The paper reports that U.S. and Cuba officials are negotiating the future of the communist-ruled Caribbean island. This all comes after Cuba's electric grid suffered a total collapse yesterday as the nation struggles with crumbling infrastructure and a de facto U.S. oil blockade that's pushed the communist-run island to the brink. President Trump escalating his rhetoric against Cuba.
All my life I've been hearing about the United States and Cuba. When will the United States do it? I do believe I'll be having the honor of taking Cuba. That'd be good. That's a big honor.
Taking Cuba.
Taking Cuba in some form, yeah.
The Wall Street Journal is reporting that the Securities and Exchange Commission is preparing a proposal to eliminate quarterly earnings reports requirements, giving companies the option to report just twice a year. The Journal says the proposal could be published as soon as next month. The move is likely to face opposition from investors, but supporters say it could help boost the number of public companies in the United States. Coming up, Australia's central bank raises rates again. We'll take a look at how the war in Iran influenced the RBA. Next, this is Bloomberg.
The things that all the members agreed on were that inflation is too high, that there are still inflationary pressures from excess demand in the economy, and that inflation expectations, we need to make sure they're anchored. Where the difference was in the timing. The members that voted to hold were voting to hold in a hawkish sense.
RBA Governor Michelle Bullock there. Now, Australia's central bank has raised its key interest rate for a second straight meeting. This as the central bank steps up its battle against stubborn inflation. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, the Aussie dollar just very slightly higher after today's RBA hike. I'm curious, though, why was it such a contentious decision? It was literally a 5-4 vote.
Yeah, it looks as though people had different views on when exactly Australia should raise interest rates. No doubt they're all concerned about the inflation outlook, but clearly traders were a little bit caught off guard because going into the decision, the pricing in the market was that Australia will be raising interest rates not only today, but probably again in May or June, and possibly even again in the fourth quarter of the year. People have had to dial back quite a bit on that. A split rate was not expected by investors today, and it sounds as though Michelle Bullock herself seemed really reasonably confident going into the meeting that she would get the hike that she wanted, but she's met some opposition in terms of some people thought they should take more time to make that decision. So we had a pretty volatile day for the Australian dollar. It came back pretty well after selling off initially after the decision came out and surprising traders, but we've since the Australian dollar then rallied again because, of course, RBA is still way ahead of most other G10 central banks, so the others are still on hold and maybe even thinking about hiking later in the year. But then since in the past hour or so, some tensions come out in the Middle East, pushed oil prices up, and Aussie dollars retreated again a bit today. So a pretty lively day in the foreign exchange market. Overall, US dollar is a little bit stronger than it was first thing this morning.
You know, it's fascinating because she straight up said, look, we may not be doing this, or at least we wouldn't be so worried if it wasn't for the Iran war. And we know central banks all this week are going to be very reticent about saying that they're doing anything because of the war, right? But she said, look, there's secondary inflation effects, and I'm not even telling you if we're front-loading here, we might end up doing lots more, and this may not even be front-loading. It was a fascinating forward guidance, really, from Michelle Bullock, wasn't it?
Yeah, all those points you brought up are exactly what the other central banks this week will be discussing. Some of them will be more open about it than others. It's unlikely that anybody else is going to act as quickly as the central bank in Australia has done, but we probably get some guidance as to when to expect those changes coming through. Bank of Japan is the one a lot of people are watching because they're not expected to change interest rates this week, but there's quite a lot of expectation that in April when they meet, that they will be able to justify. Inflation was already running relatively high in Japan, and some people have been telling them that they're behind the curve in terms of raising interest rates. They're only 0.75, so even if they raise again, that's just 1%, which is still way below most of their G10 peers. So certainly the Bank of Japan is the one that some traders here are expecting that we'll have relatively hawkish wording from the governor, especially when he speaks to the press after the actual decision comes out later in the day. People are thinking that he might sound pretty hawkish during his press conference later on and prepare that rate hike for April.
Mark, thank you so much. MLive strategist Mark Cranfield. We're going to continue this discussion in a few moments with Sabrina Caniche next. Live from London, this is Bloomberg Daybreak Europe. I'm Vonnie Quinn with your top stories. Iran steps up its attacks on Gulf energy infrastructure as President Trump doubles down on his calls for allies to help secure the Strait of Hormuz. The US president delays a long-awaited summit with the Chinese president, saying he needs to focus on the war in Iran. Plus, tech stocks drive gains in Asia after Nvidia says it will send $1 trillion of chips by the end of next year. So let's take a look at these markets then as we see crude oil ever higher. Ships are getting attacked in the Strait of Hormuz. The UK MTO says about 16 of them have been attacked. Nevertheless, there have been ships that have got through. More than a dozen have got through as well. It's roiling this market, but more than that, it's the attacks on energy infrastructure, gas infrastructure, oil infrastructure, those gas fields that are getting partially and fully shut in for several hours at a time. And then, of course, we have a whole week of central banking activity. We've already kicked it off with the RBA hiking rates as expected for a second straight meeting. The two-year yield is up almost 2 basis points. We're still below 370, though. The Fed will be next. No one is expecting any kind of an interest rate increase, but the forward guidance and what it says about inflation dynamics and the war in Iran will be interesting, given that Michelle Bullock didn't shy away from it today. Let's take a look at futures, because right now we are seeing futures lower in the European session and also in the US session to the tune of about 0.5% on the Nasdaq and the Euro Stoxx 50, and the dollar index is up 0.2%. So it could be a reverse mirror image of yesterday's action. Time now for your front page news. The Financial Times leading on President Trump asking to postpone his summit with China's Xi due to the Iran war. The US president says he needs to remain in Washington because of the conflict in the Middle East. The Guardian splashes on UK Prime Minister Keir Starmer distancing the UK from the Iran war as EU leaders rule out sending warships. The Prime Minister refusing to be drawn into wider conflict, while Germany and Italy also defy Trump's call to help reopen the Strait of Hormuz. And finally, the Wall Street Journal leading on the SEC preparing a proposal to eliminate the requirement to report quarterly earnings. President Trump has said that public companies should have to report earnings only twice a year. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. The European Union Foreign Affairs Chief says European ministers have what she called no appetite to extend their existing naval operations into the Strait of Hormuz. President Trump has called on other countries to escort tankers through the shipping lane, which has been effectively closed since the US and Israel attacked Iran. Kaja Kallas said ministers rejecting the idea of expanding current EU naval patrols from the Red Sea.
The discussion on whether we are, also extending this mandate to cover the Strait of Hormuz to go north from the Muscat line, there was no appetite from the member states to do that. As I said, this is nobody wants to go actively in this war, and of course everybody is concerned what will be the outcome.
Oliver Crook, Bloomberg's chief Europe correspondent, joins us now from Brussels. Ollie, why have EU ministers been so quick to reject President Trump's request for help in the Straits of Hormuz, given its importance in moving so much of the world's oil and gas?
So there are two dimensions to this. There is the current EU mission, the Aspides mission, which is only about 3 naval vessels, and it's operating, as we've just been discussing, around the Red Sea to patrol the area, to sort of survey things, but also to accompany ships that are trying to pass through there. And that was a response to some of the attacks from the Houthi rebels, and that is where the EU mission is currently focused. Again, this was a question about expanding that mandate, potentially expanding that fleet. Again, it's a very small fleet, so there's some real question on what actual impact it could have, but potentially it could have been used to send a sort of supportive message to the President of the United States. They concluded that they had no appetite to do that. I think the second part of this, Vani, is the bigger part of this, and it is the question of whether or not opening the Straits of Hormuz and keeping them open is a question for NATO. If you had asked people on Friday if it was a question for NATO, the answer probably would have been no. Over the weekend, it's a question that the President of the United States basically openly posed to a number of NATO nations. And the answer has been no across the board, with a few exceptions to some of the Baltic nations and, for example, Finland. These nations that are most exposed to the Americans coming out of NATO, who said we should be considering this. But I think that the German response has been very telling. We should say that the Germans from the very beginning have been the most supportive of U.S. action within Iran. But we heard from the Defense Minister Boris Pistorius yesterday saying this is not our war. There is no appetite to participate militarily. Even if there were appetite, you need to get an international structure in order to operate within, and you need to get a mandate from the German parliament, and that is something that the German government has no appetite to do. So going into this meeting on Thursday with European leaders, obviously everybody will now be concerned about what the consequences are of not supporting the President of the United States in his attack on Iran and in his sort of trying to open those waterways. Of course, we heard from the President of the United States saying that this could have some negative implications for NATO. We do not know yet, but this will certainly be front of center in mind for all European leaders in the coming days.
Yeah, absolutely. Ollie, what progress has there been on any EU efforts to curb energy price rises caused by the Iran war?
So that groundwork was laid yesterday by EU energy ministers who assembled here in Brussels to discuss a number of different actions. We also got a letter from the President of the European Commission, Ursula von der Leyen, laying out the sort of different areas that the EU could be active in trying to reduce those energy prices. The main issue is, of course, the price of fossil fuels, of gas and oil. We've seen those obviously surge over the last couple of weeks, and 2/3 of energy generation within the EU is still from fossil fuels. So they're still sensitive, despite the fact that many of those cargoes from the Middle East are actually not coming to the European shores, but they are, of course, sensitive to the market gyrations that has caused. That being said, that there are things that they have some control over, which are, for example, charges on the grids, charges on taxes on the electricity bill. A huge amount of your electric bill here in Europe is down to taxes, so they can tinker with that. There are, of course, other activities at the member state level that can be taken, subsidies to gas, as well as price caps. So we've seen a couple nations do that over the last couple of weeks. That being said, that sort of distorts the market system. You don't really want to artificially depress prices, then people will consume more, and then you will sort of deplete your supply. So these are some of the issues that are being discussed. But Vani, I think the bigger question here, there is, of course, this massive question about energy. There are the sort of political dimensions, and we started to see those emerge over the weekend when we heard from the Belgian Prime Minister basically saying that we should normalize relations with Russia, that we should have conversations about getting cheap Russian gas, cheap Russian oil again. That is not something that is in sort of the mainstream conversation here in Europe, but according to him, it's something that European leaders are saying very much in private, but not saying publicly. So that'll be another theme for the EU leaders meeting on Thursday.
All right, Oliver, thank you so much. Oliver Cook, Bloomberg's chief Europe correspondent. The Reserve Bank of Australia has raised interest rates for a second straight meeting to 4.1% now, stepping up its battle against stubborn inflation under the cloud of the Iran war. To discuss what it means for other central bank decisions this week, I'm joined by Sabrina Kanish, senior economist at Pite Asset Management. Sabrina, curious as to what you think the ECB might actually say about the Iran war, given that, Michelle Bullock certainly didn't shy away from talking about it. There'll be lots of questions asked, and central banks don't tend to like talking about these things.
Yeah, good morning. Thank you very much for having me. Yeah, indeed. So obviously, we have the ECB meeting on Thursday. And since the previous meeting, obviously, inflation risks have increased, mostly driven by energy prices. Here again, it depends on the duration and the intensity of the energy price shock. So in case of a prolonged increase in energy prices, the risk is to see higher for longer inflation, and which would, in that case, increase wage pressures and inflation expectation, and the ECB will very much be attentive to that. So obviously the ECB will come with a new set of forecasts for growth and inflation, and potentially could also come with an alternative scenario, what it will imply if indeed we have a long-lasting increase in energy prices, what would be the consequence for inflation and for growth, and if indeed we are in this scenario of prolonged increase in energy prices, the ECB would be ready to step in and tighten its monetary policy.
Sabrina, how much will it be willing to say, though? We have SocGen, Steve Englander, saying today, not much to do when not much is known, right? Will the ECB be scared of, upsetting this market, or maybe putting ideas into the marketplace that wouldn't necessarily be there if it didn't say some of what you just said?
Yeah, well, obviously, everyone is paying attention to the Iran conflict and about the duration of this conflict. Obviously, if we have a short and contained energy price shock, in that case, the normal reaction would be to look through this temporary increase in energy prices. But there is obviously uncertainty, as said, about the duration of the conflict in Iran. If indeed we have a long-lasting increase in energy prices, the risk is to see higher wage pressures as well as the incurring of inflation expectation. Bearing in mind that the energy crisis, the 2022 energy crisis, is not far long ago. Households have in mind the sharp increase in energy prices. So in this environment, inflation expectation could be incurred at a faster pace than previously. So maybe just to acknowledge that indeed in this environment, upside risk on inflation have increased, and maybe just to make the parallel with the previous ECB central bank meeting, where the focus was on the resilience of the domestic economy with potential for private consumption to recover as well as private investment. With also this renewed focus on structural reforms and the large fiscal spending. So the starting point here for the Eurozone is in a recovery mode with inflation at target. So meaning that inflationary risk were there, and they have increased with the large energy increases.
If we turn to the Federal Reserve, what is the Fed likely to say, given that it's coming up to a point where, Fed Chair Jay Powell only has a couple of meetings left? It might be, just maybe a little bit more of a sensitive meeting than otherwise it would be. And now you have Iran on top of it, and that's a very, very political situation. In other words, no matter what Powell says about Iran, it could be taken as a political statement.
Well, indeed. And again, if we focus on the economic development in the US, so I was saying that the Eurozone economy, this conflict in Iran is happening when the Eurozone economy is recovering. On the opposite, it is happening when the US economy is slowing down. So take the recent figure that we had. Q4 GDP was revised down to 0.7%, mostly driven by domestic demand and private consumption, which is the main engine on growth. And at the same time, inflationary pressures remain. So inflation wasn't changed, 2.4% for the headline, 2.5% for core inflation, and inflationary pressures are very much there. So just maybe to mention one figure, that the share of imputed prices in the CPI basket has increased to 40%. So it's not an ideal position for the US. So clearly the economy is slowing down, at the same time inflationary pressure. So the view that we have is that the Federal Reserve should remain prudent. We don't expect any move for the Fed this week.
So Morgan Stanley, and a bunch of other banks out yesterday with notes saying that they're updating their expectations for the Fed this year. Morgan Stanley is looking for a 25 basis point cut, but not immediately. Citi still expects 75 basis points of cuts this year. I mean, are there really that range of possibilities in the next few months, Sabrina? And what's your assessment of the U.S. economy?
Well, again, it depends on the view that we have on the U.S. economy. We are on the camp that the Federal Reserve shouldn't cut as much as 75 basis points. So the view that we have is only one rate cut, and obviously this year. And again, it depends on the war in Iran, the duration, as we explained before, and the potential for inflationary pressure or the upside risk on inflation to increase.
All right, Sabrina, thank you so much. That is Sabrina Kanish, Senior Economist at Peak Day Asset Management. Coming up, Nvidia forecasts sales will be $1 trillion through the end of next year. We'll have more from the company's biggest ever annual event. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, and now to some corporate news. Morgan Stanley is warning that private credit default rates will hit 8% as advances in artificial intelligence continue to disrupt the software industry. Strategists at the bank say that while AI disruption is yet to impact private credit fundamentals in a material way, elevated leverage and looming maturity walls within the software sector may push default rates to levels not seen since the pandemic. Britain's Chancellor will use the annual Mace Lecture today to set out her economic vision, highlighting AI, regional growth and closer ties with the European Union as the biggest opportunities for growth. She'll say that Britain cannot afford to stand still and that she wants the technologies of the future invented, built and deployed in the United Kingdom. And staying with the UK, the government says it will spend more than £1 billion on quantum computing research over the next 4 years as it boosts investment into a technology that's increasingly considered critical to national security. The government is looking to encourage larger scale computers for public sector employees, academic work and commercial use over the next 10 years. Shares in Nvidia spiked in yesterday's session after CEO Jensen Huang predicted $1 trillion in sales from the flagship AI processors. He also unveiled a variety of new products and plans to push deeper into central processing units while addressing the company's biggest annual event.
I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion.
Let's get more now from Bloomberg senior strategist Neil Campling. I feel like Dr. Evil, you know, back when $1 trillion was a lot of money. So, I mean, is it a lot of money? Put it into context for us. It's a few $100 billion, right?
1 trillion. It was that pause before he said the 1 trillion, I think, which is quite amusing. I mean, 1 trillion clearly is a very, very big number. I think the interesting part actually is we look back at where the street are. They're pretty much already there at $950 billion. But and some analysts have already got the 1 trillion. So maybe there's not the big increase that people have come to expect, and they've also come to expect these big statements from the CEO. I thought one of the interesting points was that he mentioned that the demand for AI compute had gone up 1 million-fold over the last 2 years, which is just a huge number in of itself. So there's some big numbers are being bandied around. He mentioned it's an inflection point for inference. He announced the release of 2 new whole product sets, Grok as a new chip that doesn't require GPUs, and also around the open core architecture as well that he mentioned.
Yeah, in a sense, you can predict as many sales as you want, right? But they have to come through at the end of the day. What's the danger that he's setting himself up for massive failure if a few of these big orders don't materialize? I mean, we're seeing Meta lay off 20% of staff in some areas.
Well, I suppose we're at a point where perhaps we're seeing the AI inference allowing for other companies to do more work with less employees, so there is that element to it. But there's also within the supply chain, they have to come out with these new products because they now have competitors who are better positioned than they were historically. So whether it's an AMD or a SoftBank ARM architecture or the Google system of these things called TPUs rather than the GPUs, of course, because tech loves an acronym. Mm-hmm. So there are alternatives that are coming up in terms of the technology. So Jensen has to remain ahead of that curve. But as you say, there are some big promises here in big numbers. So we have to continue to deliver upside to all of those estimates going forward.
So these new products, Neil, I mean, it's hard to evaluate them, I guess. We haven't seen them. They haven't been built. But do they sound like they could be hits?
It does in terms of you look at all the partnerships they announced. There's definitely a lot of interest in the moving into. You mentioned into CPUs, for example, that goes into Intel's core market. The deal with Uber in autonomous vehicles, another interesting one. So there's no guarantee of a hit, but clearly Nvidia remains the benchmark that all else are trying to strive to become the next leader in AI.
I have to ask you about SK Hynix because it did throw a pall over things a little bit. Memory chip shortage right up until 2030. How much should we be concerned about that? How much should the likes of Nvidia be concerned about that?
Well, this is a key question, isn't it? In terms of we've already had people say they think they're outsold for the next 1, 2, 3 years on these HBM4 DRAM chips, for example. But actually, you know, the risk here is that because you haven't got the supply, or perhaps if certain components aren't available, then reaching those $1 trillion of sales or other big numbers could be a risk because there's just not enough supply of the memory chips.
All right, I feel like we need a cat on the table for discussions like this, or maybe Jensen Huang needs a cat on stage, right? You can't say things like that without an animal. All right, Bloomberg senior strategist Neil Campling, thank you so much. Plenty more coming up. This is Bloomberg.
It's in China's self-interest to open the Hormuz. they would be the biggest beneficiaries of totally opening the strait. So I don't think it's so much a question of them doing us a favor. They need that strait open. They need that oil.
Former U.S. Commerce Secretary Wilbur Ross there, and that's as may be, but China also has a massive, massive amount of oil just in reserves and has been building up for just a situation like this. That said, oil has been trading below its highs, right? Still, though, I mean, if you take a look at this chart, we're not that far below our highs, right? If we take a look at WTI, we're still trading just $3 below $100, and we topped that earlier this morning. In fact, we saw a 4% gain just in the last hour alone in oil before it pared some of that back. So this trade is really the trade of the moment, because it's as oil goes, so goes the S&P 500, so go European stocks for the most part, so go treasuries. It really is this trade that's dictating everything. So let's take a look at the next chart. Other countries obviously suffering intensely, and it's not China, like Wilbur Ross said. It's all these other countries like Indonesia, like India, countries that have had to intervene in their currency markets in order to make things work for their economies. And even then, Indonesia has erased years of gains at this point in its stock market. I mean, it's really been thrown back into, like pre-2021 time periods, basically, if you see what's happening here. And that is because of inflation, and, this oil spike is not helping things in the slightest. And then let's take a look at the Aussie dollar, because, of course, we got that RBA hike. It was the second in a row. The market was pretty much anticipating it. What it perhaps wasn't anticipating was how much there was non-consensus on the board, right? It was a 5-4 decision in order to hike. So you can see the Aussie dollar right now, it's unchanged because the market was expecting that 25 basis point increase. But it was really fascinating to hear what Michelle Bullock had to say about the secondary effects of inflation thanks to the war, and what that might mean for the Federal Reserve and for the ECB, of course, and what they might say when asked questions about inflation and the war. And again, a quick check on oil: 104 basically for Brent and 97.50 for WTI. Your risk events then today at 10 a.m. UK time, we get the German ZEW survey. Expect a deterioration. 12:15 UK time, we get ADP unemployment out of the United States, and then Volodymyr Zelensky is meeting Keir Starmer as well. Coming up, the CEO of Commerzbank will be on the opening trade at 7:30 London time to discuss that UniCredit €35 billion bid to increase its stake. The opening trade is next. This is Bloomberg.